Welcome to episode 347, Paul Singer, 10 Trading Lessons. This is an outline of episode 347, lesson 1 to lesson 5. This is an outline of episode 347, lesson 6 to lesson 10. Lesson number 1, Paul Singer, the Vulture. Vulture investing is distress investing. Here's a cartoon of Paul Singer, the grease-eating predator. Lesson number 2, evolutionary learning, from one product to multi-strategy. His one product was convertible arbitrage.
The core of what you do you call it a macro fund or a value fund? What would you describe your investment technique?
Some people call what we do multi-strategy. Others call it absolute return. The idea of our portfolio mix is to try to make money as close as possible to all the time. What we've done over the years in pursuit of that goal, as vanilla convertible hedging became uninteresting, was add other ways of generating absolute return to the mix. For example, I came to feel, and part of it was because of my experience as a lawyer, that manual activities, trading manual effort for risk, was a good way to add value or.
Lesson number 3, longevity. First, his return of 13.1% over 40 years. Second, his hedge fund is one of the oldest hedge funds in Wall Street. Third, his Vulture fund is the world's largest Vulture fund in 2018, with 35 billion asset under management.
But it was a contentious situation.
So if somebody had invested with you in the very beginning and he or she kept their money with you from the very beginning, I don't know if anybody did that, what kind of rate of return would they have compounded over 40 years?
The answer to your other question is from the beginning, a 13.5% net compounded rate of return. So $1 became like $160, $165.
Lesson number 4, low volatility. Paul Singer only has 2 down years out of 41, a remarkable record. Lesson number 5, patience and tenacity. 15 years of wrestling with 3 generations of governments from Argentina.
Do now is what you call equity activism. So there are a couple that are very well known. Let me talk about one that's very famous all over the world. You bought some bonds from Argentina. Was it hard to hold on that long?
It was not hard to hold on in a portfolio sense because at no time until the current government came into office, I believe in December 2015, at no time before that did the previous 2 governments negotiate with us. So as the claim mounts up, it becomes potentially a larger recovery.
Well, did any of your investors say, Paul, you made a little profit, it's okay, go on to something else? Did they ever say this during this long period of time?
Interestingly, no.
They didn't?
No.
Okay. Now,
even when it got some press, and it was not an easy situation. I mean, it wasn't only the 14 or 15 years holding this thing, but it was contentious.
So you didn't worry if somebody was going to maybe, physically attack you from Argentina? You didn't worry about that?
This isn't the place to talk about security.
Lesson number 6, uncorrelated market, uncorrelated growth. This really is the original definition of a hedge fund.
One of the risk limiting and value creation strategies is uncorrelation. Uncorrelation is a wonderful element to add to an absolute return seeking portfolio, because if you're doing something that has a pattern of risk and return, even if it's volatile, even if it's binary, make a lot, lose a lot, but a pattern of returns that doesn't have anything to do with the course of the stock or bond markets or anything else in your portfolio, that's an elegant part of the mix.
So lesson number 7, avoid litigation. Litigation is last resort.
Today, you would take corporate bonds or government bonds and you're willing to litigate?
Litigation is always a last resort in a situation in which there's a dispute about seniority or acclaim. It's part of the equation.
Lesson number 8, how to intimidate governments and corporations through hard work and through homework.
At least somebody knows that there's a firm that has the ability to back its assertions and goals, and a team that's done a lot of work. We don't just show up. We may show up in a 13D filing sense, but we spend a lot of time trying to figure situations out, develop our views about which situations are interesting to us, and there's a set of characteristics, which situations are not.
Lesson number 9, by all means necessary. In 2000, Paul Singer kidnapped Alberto Fujimori, the ex-president of Peru, fleeing Peru to Japan for human rights violation by seizing his jet. In the end, Paul Singer earned $58 million ransom from Alberto Fujimori. Lesson number 10, hobnobbing with the rich and the powerful. He's a major Republican donor. Mitt Romney, Republican presidential candidate 2012, is a major investor in his Elliott Management hedge fund. Here's a picture of Mitt Romney talking to Paul Singer. Thank you for watching. Please subscribe and leave your questions and comments below about the Vulture. Wishing everyone peace and prosperity.